Hi, welcome to another market analysis video for our premium members. So let's start right off the bat with the index, the Dow here. Once again, we're in this range that just goes on and on and on. I don't want to keep harping on the same issue, but let's look what happened here this past week. We had a very constructive breakout on Monday. I mean, it did everything that you wanted the market to do, especially after Thursday and Friday, after FOMC, right up against the border towards all-time highs, heading towards them, recent highs at least. Monday, we opened up higher. This is a 30-minute chart. And then the typical midday afternoon drift. Okay, that's fine. Tuesday opened, and then the second period just collapsed, broke through, minor support, 17,928 here, rebounded, went back towards a trend line that we had drawn, connecting a bunch of tops going back to last week, and ended right below that trend line. And then we had Wednesday, which immediately, off the first period, couldn't get through that trend line, and it was choppy. I mean, this is just brutal when it does something like this, because you have kind of like a setup here for a breakdown. You have two bars that are like, okay, yep, this is it, we're going lower, and then bang, in the afternoon it goes right back up and then settles in the middle of the range for the day, actually on the lower end. Anyway, that's that. Thursday, another huge red candle or two to start the day. Congestion after that, and then breakdown. This was actually a scary 3 periods on Thursday, in the sense that I'll show on the next chart, which is a longer time frame, that clearly where we are now, anything can happen to the upside or downside. And then Friday, go figure, bang, right off the opening bell, the market just climbs higher and kind of goes sideways, and then dominates, ascertains that it's not over yet, and ends the day. Basically, what I want to draw attention to here is this candle here. I'll widen this out a bit. And these are one of those, call them NUDs, N-U-D, no you don't, this candle here. Because if you're looking on Friday, you had a nice open after Thursday's horrible day. Friday had a nice open, and then the second 30-minute period was like, okay, maybe this is the end of the rebound from Thursday. And then the next candle, nothing really much happening, and then the next candle looks like it's going to break out higher, and then this NUD candle, where it actually goes down and tests support for Friday. That was clearly support on Thursday before it broke through it. And you had one of these candles where opened higher, touched this trend line, then closed higher. Actually, these two together are nuts, because this one opened, the next candle, again tested this trend line and then closed higher. This candle here, this second somewhat bullish candle, was an indicator that the market was going to go take off for the rest of the day. Anyway, let's look at a longer term chart. Okay, so this is the daily chart for the Dow, and again, not to beat a dead horse in honor of the Kentucky Derby this past weekend, but we are still, after a good 8-9 months, in the same area that we were before. The 20-minute is doing, the 20-day, this is a daily chart, 20-day moving average, it's doing its thing. It touched the 50 like 2.5 weeks ago, and I don't know what to say about this market. Look at all these tops up here. I mean, this is clearly a resistance trend line, but every time it breaks through, it just disappoints. Here's another one. This was on the 27th of April. So just got to be really selective, and it's a very trying period. It really is. There's no other way of saying it. Just have to be honest. Here's a 200-day down here. Probably have another test of this upper resistance area, and we're going to want to see not only a test but a daily hold above this 18,130 level. This is a daily chart of the Russell 2000, the small stock index, and damn, not a very good week last week. I mean, this week, this is Monday, Tuesday, Wednesday, Thursday, and Friday. Even though the Dow, which is, I mean, honestly, is primarily driven by the big techs. So, I mean, this could be substantial here. Just a major drop, especially after trying to fake out to the upside. So this was by far the worst performer out of all the indexes, and clearly something we're going to have to keep our eyes on, because Friday was just a minuscule bounce, and so we'll be watching this carefully next week. And this is the NASDAQ, the daily NASDAQ chart, and again, just like the Russell chart, just fugly, excuse my French. This is the 50-day moving average, and you know, it breaks through and bounces back up, and here it touched it and rallied. On Thursday, it went below it and closed right at it. So it is kind of like a band around it to keep our eyes on. But who knows? Who knows what's going to happen with this? Just have to, again, like with all the indices, watch for a move that holds, that sticks. All right, let's look at some more. So it should be no secret to our members that we play in the biotech space. This is the IBB, which is the Biotech Index Fund, and very much like the Russell small cap and the NASDAQ, it was an ugly week, although Friday was a little bit more supportive in this name. You know, here's all-time highs, which goes back to March 20th, about a month ago. So we have resistance here. We'll keep our eyes on it. Here's a 200-day down here, just like the other indices. It's below the 50. So each index, net, each index has its ratio of how bullish it is to how bearish it is. So this is the biotech index. So this is the VIX, VXX, which is the volatility index, and this is a daily chart. And basically, we have a trend line here at 2083, 2081. The low is 2060. So the trend line here is around 2065. It closed at 2080. And the thing that we want to watch for is, if this holds and you have like multiple bottoms here, what I ideally like to see is a drop below it and a close above it, a NUD. No, you don't. It would be great to see a NUD candle here starting next week, because we know exactly which entity to jump to take advantage of the volatility index taking off. So we'll have our eyes glued on this one also. So the first stock chart we're going to look at is one that we got involved with. Not at the best level. It's HT, Hersha Hospitality, Harry Thomas. There's a lot of reasons why we got involved here at $6.70. We clearly don't get involved just because of a chart pattern, and this obviously something we should have noticed that clearly is played out in this pattern is this prior level up here, that the gap that it broke down from, and this is turning out to be just a filling of the gap, which is very unfortunate, and mea culpa for not giving more credence to that. There was a lot of buying here at $6.70, and so all those things taken into consideration is part of the reason why we put on a position here. I also want to add that we never, ever, ever endorse buying more shares to lower entry costs. The expression "catch a falling knife," it could happen with any stock. We only add on strength, or like I'm going to show with glue, if something has run so much that it pulls back, then you could add on immediate weakness yet longer term strength. There's a subtle difference here. So I want to make that very clear. This is the level here, 636. But we're still in it here. With our stops, by the way, we don't want to have those in the market before the market opens or the first half hour, first 45 minutes. It's just, everybody goes hunting for stops because they know this is going to be a stop level. This goes back to the 25th. This is a month long of sideways. Then we had a breakout, held trend lines, rallied, had one of those nud candles here. No, you don't. I mean, look at that. It opens, drops like a stone, and closes above the trend line. And then to even trap more potential bulls, it rallies from that up to the top side resistance, 670, where unfortunately we got involved. And since then, it has done nothing but go down. It does look weak. We don't know how long we're going to stay in this one for, but who knows what could happen. So that's HT. This is an hourly chart of Sequinum, SQNM, which our swing trade members are very familiar with. We are holding this as a longer term investment trade, swing trade. This looks like it's just really priming to break out. The market is anemic in general. Biotechs, as I showed you, had a lousy week. Yet this one, relative to all that, and this is a biotech, this one is, there's buying support. Volume, if you could see below here, was okay. This is an hourly chart. And this is last week, Monday, Tuesday, Wednesday, Thursday, Friday. I really like the way Friday looked last week. Clearly a resistance line here around 465, 467 is the recent high. So we might jump all over this if we see favorable, see the ducks line up in this name next week. You'll be getting an alert from us because we really like this name. Let's look at a longer term chart for this one. Yeah, here's the daily chart for Sequinum, and yeah, it's a little bit sloppy, but net, in my esteemed opinion, this one looks like it's ready to break out. The 20 is getting further removed from the 50. The 200, it's all the way down at $3.60. And volume, if you look at it, I'd say 40–50% of the last, since April 13th, is good volume on up days, which is something to keep our eyes on. And as far as our proprietary volume filters, this one is aces. So again, all hands on deck for Sequinum.